Hey, what's up, Internet? In this video, I'm going over 8 different exit strategies that are available to you and your residential property, including some that most real estate agents don't really want you to know about or think about much. What I mean by an exit strategy is pretty much just anything that can enable you to monetize or otherwise get out of your property. So whether you are considering selling or renting out or otherwise, or some kind of hybrid model between those two, or something else that will enable you to monetize the property that you own. So whether you're living in it right now or not, we're going to go over 8 different options that are available to you to help accomplish whatever your goal is. And it's important to note that all 8 of these options are not necessarily going to be appropriate or applicable to each type of person or each type of situation. This is somewhat of a sequel video to a video that I did on these 6 questions that you should be asking yourself if you are thinking about selling, renting, refinancing, whatever the case may be. So the link to that video should be somewhere, I don't know, somewhere in the maybe at the end of this video or somewhere down in the notes somewhere or something along those lines. But I highly encourage you to check that video out. And so in that video, we go over questions such as, do you actually need to sell? Do you actually need to move? What condition is your property in? What kind of equity do you have? And what's your credit score like? There's one I'm forgetting right now off the top of my head, but I know it's important. But so for that reason alone, to get that last super important question that is so important that I'm forgetting right now, please go back and watch that video and then come back and we'll get into the different options that you might be entertaining based on your responses to, what I go over in that last video. So if this is your first time meeting me, my name is Jake Lyons. I am a real estate agent here in the Chicago area with Berkshire Hathaway Home Services, also the owner of the ChicagoHomeSource.com. And my main mission in all the content that I put out there and the way that I go about my business is just to provide, make sure that my clients and my followers, my viewers, my whatever you call them, are well-informed, data-driven, and yeah, that's my main ethos. It's well-informed, data-driven, and yeah, I think that covers it. So with much further ado, let's get into the different options that are available to you if you are looking for an exit strategy in the property that you own. All right, so for the first one, I'm going to get the most obvious one out of the way and talk about listing your home with a real estate agent. I know this is probably the most self-serving of all of them. Hi, I'm a real estate agent, but it is honestly the one that's going to make the most sense for the most people because it's 89% of all homes were sold by a real estate agent within the last, in 2020. I think that was the stat according to NAR. And it's going to be the best way to ensure that you are getting the best price and the best terms when you're working with a professional, an expert, somebody who knows the market, somebody who knows how to handle all the marketing, all the negotiating, all the paperwork, all the legalities, all handling all the different personalities that are involved in a transaction, knowing all the different professionals that need to be called upon, whether that's inspectors or lawyers and lenders, insurance people, whatever the case may be. It just it's going to save you a lot of time. It's going to save you a lot of energy. It's going to save you money. We'll get into that a little bit later. And rarely, if you are actually selling your home, does it make sense to go any other route. Some cons obviously are that there is a cost involved. The average cost of hiring a realtor is going to be somewhere in the 5 to 7% range based on the sales price of the home. It might take a little longer to from start to finish so if you're in a position where you're looking for a really quick sale, maybe there might be better routes to go on that one. And if you are in a situation where your equity is not so high, you might want to consider some different options. But for the most part, the pros are going to outweigh the cons if you've decided to sell your property. So that's the first one, and that is listing your home with a real estate agent. The second option is selling your property to a cash investor or cash buyer / investor. So this could be a good option for you if you are in a situation where you just need to sell this thing fast as possible. There's 1,000 legitimate reasons why, you might be in a situation like this. Maybe the condition of the property has gotten beyond a point that you can handle, or you just don't want to deal with it anymore. Maybe you're out of town now. Maybe you inherited a property that you just don't have the means or ability or desire to deal with, and or maybe there's some bills coming due on it that are put you in a position where you need to sell fast. There's a lot of reasons why why somebody might seek this type of transaction out, and there are a lot of cash buyer investor types out there who would be happy to talk to you about that. You can go about finding those by calling the numbers on those we buy house signs, and or just doing a Google search, calling me, because I also am in the market. So there's a lot of ways to go about doing that. You do probably need to have a decent amount of equity in the home, or own it free and clear, or at least have a decent amount of equity to play with in there, or else you'll be probably looking at a different type of option. And obviously the main drawback of this is that if you had more time to market your property with an agent or with some other means, you probably get a higher price. So that's the main. You can close on a deal, you can close on your property and have money in hand in 5 business days, 10 days, a couple weeks at the most, which is a far cry from the month, 2 months, 3 months, however long it might take if they were sitting on the open market, if you just don't have that kind of time. But you are going to pay for that time with your equity, essentially. As bad as that sounds, that kind of is the deal. So because it has to be, for it to make sense for an investor, there has to be enough gap between what it's worth and what they're buying it for, including whatever rehab they have to put into it for them to make money. See, so there's that's kind of the rub on that. But it is a legitimate option, and it solves a lot of problems for a lot of people, and it's there for you. So number 2 was selling to an investor. All right, the next option we're talking about is renting out your property. This is something that we're all probably familiar with on some level or another. I think most of us have rented at some point in our lives. So, this could be your opportunity to be on the receiving end of that. This is good if you're in a situation where you don't necessarily have to sell, but you do have to move and you want to monetize the property. And thanks to certain companies like Airbnb and things like that, you even have the flexibility of renting out your property and staying in it at the same time with a shared listing that you can rent out a room. I guess you don't even need Airbnb for that. You can rent out a room anyway. But options are out there. Rent out your basement, your garage, your attic, whatever you want. As a stay legal though, but there's options for you. So renting out your property is definitely a good option if that's the situation that you're in. So the main pros of it are, you can have somebody else cover your mortgage for you, build your equity for you, and even be able to cash flow on it, make some money each month on top of that. So that's kind of the main, most obvious pro to it. You maintain the flexibility of being able to move back into your property if you are renting out the whole thing. And like I said, you're just building your equity on autopilot. The main cons of it is that being a landlord isn't for everyone. There's a lot of responsibility that goes along with that. There's a lot of liability You have to make sure you have your insurance and your contracts and all that kind of stuff really set up right. It's risky. You have to screen your tenants very well to make sure that a bad tenant moving into your property can cause you all kinds of headaches for your property, for just about for a lot of different reasons. And also, renting out your property might not even be an option for you, depending on what kind of HOA you're in, kind of, rules and restrictions are involved there. So before you just go ahead and rent your property out, make sure that you are technically allowed to do so according to the bylaws of whatever association you're with, if you are with one. And then, there's the cost of being a landlord. There's going to be maintenance costs. There's going to be things like that. Or if you've hired a property manager, there's a cost that goes along with that. So, there's like anything else, there's pros and cons to weigh. So, but this can definitely be a good option for a lot of people. A lot of people love it and, make a whole life of it and build all kinds of financial freedom from it and passive income. So, highly encourage you to look into renting your property out if that is something that you think might make sense for you. All right. The next, I believe the fourth thing that we're talking about right now is it's kind of a hybrid model between selling your home and renting your home. Is what we call a lease option or a lease to own. And what this means is the tenant coming in, you're basically renting out your property to a tenant, and the tenant has the ability or the option to purchase your property at an agreed upon price sometime within the time frame of the lease. So and these tend to be longer terms. So for example, the lease might be for 5 years, and anytime within those 5 years, the tenant has the option to exercise or the right to exercise their option to purchase your property for let's just say $300,000. This is not a very common setup in today's market. It's often looked at as kind of a last resort if you're having a trouble selling, which in today's market, not many people are really having trouble selling, but it doesn't necessarily have to be that. It could be even like somebody that who is just can't quite get the financing right now or something along those lines, and you want to sell, but you're not in any big hurry and you want to sell to somebody, so you set up something with them, or it can be anything in between. I mean, there's a lot of scenarios where this might make sense, but so that's kind of the general setup of it. The pros are, you can actually get more income out of this than a typical rental, because you should also be able to charge a premium for the option. The tenant should be responsible for more of the maintenance costs and the utilities than a typical tenant would be, because they kind of have some skin in the game and they want to get, the idea is that they're getting used to the responsibilities of home ownership and that this is the home that they will be owning. So, they should be kind of getting used to how things work with this home. And like I said, you have a tendency, or it tends to be longer term contracts. So as long as the tenant is good, they're locked in there for a longer period of time and you're getting more income. So those are good things. On the flip side, if the tenant ends up being not a good tenant, you're stuck with them for a longer period of time. And, the other thing, the strike price that you negotiate can be kind of a gamble either way. So, if within those 5 years, the property appreciates to 400,000 and then they exercise their option to purchase it at 300,000, well, you just kind of lost $100,000 there and what you could have gotten on the open market had you waited. And, if it drops to 200,000, they're probably not going to exercise that option, and then they're going to leave, and now you're stuck with a property that's now worth 200,000 when maybe you could have gotten more out of it. So those are sort of the quick pros and cons of the lease to own of the lease option. But yeah, depending on your scenario, know that that is an option that exists. The next option we're going over is the cash out refi, which is real estate lingo for refinance. Of all the options we're going over, I would say this is the one that I am the least qualified to really get into details with, because I am a real estate agent and not a loan officer. And I don't work directly in the lending world, although obviously I work side by side with the lending world every day. But basically, I do know that this can be a good option for you if you have the flexibility of not necessarily needing to sell or move, or not, maybe you have a desire to rent out your place, maybe you don't, but you do know that you want to turn your property into cash some way. So as long as you have the equity to do it and the credit to do it, this could be a good option for you. So just as a quick example, let's just say your property is worth $100,000. You owe $50,000 on it, and you find a bank that's willing to give you a cash out refinance at an 80% loan to value ratio. So they would give you that cash out refi of $80,000. You pay off the $50,000. Now you have a new loan for the $80,000, but you kind of get to profit on that $30,000 between the 50 and the 80. If that went kind of over your head, please, feel free to rewind it, or even better yet, reach out to me and I'll get you in touch with some lenders that can, go over this in better detail, with regards to your specific situation. But, the main kind of pros and cons to this is that, you get some of the cash that you're looking for, without having to sell or to rent or inconvenience you in any other ways. Basically, just filling out some forms and some paperwork and getting an appraisal, if that. And some of the cons, maybe it could running your credit might impact your ability to do other things. Might not necessarily be the right move for your specific situation. But just know that it exists out there, and could be a good option for you if that sounds like something that you might want to do. All right, the next thing we need to talk about is renovating your property. So of all the options we're going over, honestly, this one probably doesn't really belong on this list, to be honest, because it's not technically a exit strategy or necessarily having specifically to do with moving or monetizing your property, but it is something that can be used in conjunction with all these other options, or most of them. If you want to sell, renovating your property can help you get the most money in your sale. If you want to rent out your property, a renovated property is going to get better rent, better tenants than a non-renovated property. Something that doesn't have all the features that the modern buyer or a renter is looking for. Kind of common sense there. So, and even if you're looking to do the cash out refinance route or something along those lines, that is going to be dependent on, likely going to be dependent on an appraisal, or at the very least, what is defined as the fair market value for that property, which again, a renovated property is going to be worth more. So you'll be able to get more out of that deal too. So the main sort of, those are the obvious pros of it. There are some drawbacks though, in the case that you be sure what you're investing in, and the kind of return that you're getting. So this is a very common mistake that a lot of people make, is they might spend $50,000 on a new deck and automatically assume that their property is worth $50,000 more, when that is just simply not the case, at least not necessarily. So, be sure before you just start, running a Home Depot or contacting contractors and really, getting too into the weeds with it, make sure that you understand what repairs and what renovations and what projects are actually going to yield you the types of returns that you're looking for, because it's really easy to actually lose money on doing a renovation. So, reach out to an expert on those matters, and you should be good to go. But yeah, so that was our brief discussion on renovations, and now moving on to the next one. All right, the next option we're going to go over is going the DIY route of selling your home. So doing the for sale by owner, or as they are affectionately referred to in the real estate industry, FSBOs. So this could be a good option for you if things are financially very tight for you right now, and you really are in a situation where you need to pinch pennies. Maybe your equity is particularly low or even, and you don't want to lose any money on the sale of this house, which is obviously a fair concern. Nobody likes to lose money, right? And or you are very confident in the whole process of buying and selling properties. You've done this before. You've been around the block. You feel like you have a good handle on all the different sort of things in the orbit of a real estate transaction. All the things that I talked about back in the beginning on what a real estate agent brings to the table, all the hats that have to be worn between the legalities, the marketing, the paperwork, the disclosures, the contracts, the handling all the different personalities in a transaction, coordinating all the showings, coordinating all the different professionals that have to come through, the inspections, all that kind of stuff. If you feel like you have a pretty good grasp on all that, and some of the other things apply to you as well, then this could be a good option for you. Obviously, the main pro of going the FSBO route is that at least in theory, you can save money on the agent's commission fee. This doesn't necessarily play out in reality exactly how people want it to, as the vast majority of buyers that are going to be coming through are being represented by buyers agents, and those buyers agents want to be paid for the work that they're doing. So you might have a hard time getting buyers in the door if you're not willing to kind of play ball with the buyer's agents. And I'm not saying that is a good thing or a bad thing, but for better or worse, that just kind of is the reality of the situation. So, you might not be in for the whole 6%, but you might be in for 2.5%, 3%, something along those lines. Not necessarily all the time, but that is a thing. And, the other thing is the common, it's not very common. It's not as common as you might think. It's actually getting more and more uncommon, or less and less common, to go the FSBO route, which is kind of the opposite of what you might think. You might think that with all the access to technology and the ability to get your home out there and that kind of thing, that more people will be going this route, but it's actually getting less. According to the National Association of Realtors, only 8% of homes that were sold in 2020 were sold for sale by owner. And those homes sold for an average of 26% less than homes that were sold by real estate agents. So, suddenly that 6% commission fee might not be looking so bad, right? But so that's not necessarily that's going to be the case for everybody, but those are what the numbers say. So obviously another big pro is that you do have control over the whole situation, if that's something that is important to you and that you feel confident that you can handle. And there are also kind of hybrid models available to help on the marketing side, at least a little bit. There are kind of flat fee brokers out there that'll charge a pretty modest flat fee to put your property on the MLS, but from there they don't do anything else that an agent would typically help you with. They're not going to help you negotiate. They're not going to help you coordinate anything. They might do a little bit of paperwork stuff, but very minimal. And but just in terms of the marketing, at least it could be a good option for you. So the cons, right? The next and last option that we are going to go over in this video is that of the short sale. So this is an option for you if you are in the situation of needing to sell, having a provable hardship, and having negative equity in your home, meaning that you owe more on the home than what the home is worth or what you could get on the open market for that home currently. This is something that you would have to negotiate with your lender to do, for the lender to sign off on, selling the home for less than it's worth, or being able to write off some of your debt obligation, and forgive that debt obligation. This is something that, so that those are kind of the main pros of it, is that, you can still sell the place, you can still get out from under it. And technically, you'll be able to have some debt forgiven, assuming that the lender is willing to play ball with all of those things. The main cons of it, are kind of a lot. Like it's going to impact your credit. It's going to impact your ability to get loans, and it's going to do that for a few years. It is not as bad as a foreclosure, so that's one good thing. I mean, a short sale is definitely preferred from the perspective of the seller to going through a foreclosure process, because that looks a lot worse on your credit report. But a short sale still isn't great. One pro is that you're along with being released of your debt obligations, the lender will often pay for your closing costs. So you can kind of, be relieved of stress on that as well. But yeah, the debt obligation that is forgiven might result in a taxable event for you. So oftentimes forgiven debt actually counts as earned income on the tax return. I'm not an accountant, so I'm not giving any kind of tax advice here, but according to my understanding, that's how that works, or that's how that can work sometimes. And on that newly earned income, you'll have to pay taxes on it. So if you find yourself in this situation, I hope you don't, but if you do, know that this is an option. Please reach out to an agent, a lender, an attorney, and probably an accountant as well. And yeah, so short sale, that concludes our discussion on all of these options. That's all I got for this. Went on a little longer than I thought I would, but that often happens when I get to talking about real estate. I just get too excited and can't help myself. I hope you got some value out of this video. If please reach out to talk further about these options. If you want to talk to me or somebody on my team about your exact situation and which of these might make the most sense, or what combination, or maybe there's something outside the bounds of what we talked about here, that's certainly possible. Please reach out to me. Again, my name is Jake Lyons. I am an agent with Berkshire Hathaway. You can visit my website at thechicagohomesource.com. A lot of resources there, and a contact form, and there's also there should be more contact info somewhere in the vicinity of this video, depending on where you're watching it. If you got value out of it, I hope that you would subscribe, like, comment, follow, do whatever the thing is that indicates that that you enjoyed this and got a lot out of it and want more of it, according to whatever platform you're watching this on again. And that's all I got for you for this video. So looking forward to talking to you next time, and that's it. Goodbye.